What's up, guys? Welcome back to the channel. Thanks for tuning in. Today in this video, guys, we're going to talk about Altered Protocol, Terra's first elastic token. Now you're like, what the snap? I didn't know they put rubber bands in tokens. Don't worry, guys. I'll explain it to you how this protocol works, what they're looking to do, and how, in my opinion, I love the stablecoin game, and this could be a fun play. Of course, guys, this is not financial advice. I'm not a financial advisor, but this is a very novel concept that would pay you to understand. Like literally, if you understand how the mechanics work, you can make some money with it. Of course, guys, not financial advice, not a financial advisor, and at the end of this video, I will be giving away some of the Altered token. If you guys want to listen and learn how you can be eligible, make sure you guys stay till the end of the video, and I'll be giving out some Alt or Alt-T tokens. So, how does Altered work? First elastic token. What the snap does that mean? Okay, so this is what it means. Say, for example, the token is trading at 1 UST, the Alt token. So that means it's at peg. That's what it's trying to trade at. So nothing's going to happen. It's going to stay at 1 UST, and you're going to be like, wow, 1 UST equals 1 alt, and 1 alt equals 1 UST. Okay, what the snap? Nothing crazy. Now, say, for example, the token goes below this 0.95 cent equilibrium zone. What does this mean? If it goes below that, now that means the supply you have in your wallet is going to decrease. Now, don't get your panties in a wad, okay? Because it does the reverse on the upside. Because if it goes above $1.05, you actually gain more tokens. This rebases over 24 hours. How it gets like the rebase rate, but as you can see here right now, there is a price alteration in progress. So what you guys need to know is TLDR is the tokens, when they're above $1.05, they will actually increase the amount of tokens in your wallet, and below it, it will decrease the amount. Okay, so now you guys are listening to that and you guys are like, okay, so wait, if it goes below 95 cents, they're taking my money? And if it goes above $1.05, they're giving me money? That doesn't make any sense. Like, won't I just lose money? Okay, so how elastic tokens work is they try to protect the value or the amount of the supply you hold. So say there's 1,000 tokens in circulation and you own 100 of them. That means you own 10% of the supply. So at any given time, whether the token is trading above above $1.05 or below 95 cents, you will still always hold that certain percentage of the token amount. So again, if it has to rebase negative and you go from 1,000 supply to 900, you will now own 90 tokens. So if you relate that, that means you still own 10% of the supply. And the reverse is true. So the reverse is if it increases to 1,100 tokens, you now own 110 tokens. Yes, they literally just printed you money in your wallet. And the reverse is true as well. They could take quote unquote alt tokens out of your wallet. However, you will still hold the same amount of the protocol. That is what they're trying to get at. There are so many other stablecoins that do different things. There's one that are one-to-one backed. There's some that are partially backed. There's some that are fully algo backed. And then there's some that are literally just backed by, well, a peg that it tries to stay to. And this is what the Altered protocol is doing. They're also having a trading competition going on Loop as well as through TerraSwap. In order to do this, you just have to trade back and forth. I'll leave a link in the description below so you guys can see the rules and documentation. Now, I'm sure you guys have a bunch of questions because, dude, I have thousands of them. Like, what is Altered? Okay, well, Altered is a elastic token. Here's how it explains it. But the best way to understand it is that it's related to Ampleforth. If you guys know about Ampleforth, then this concept is pretty easy to understand. However, if you don't understand it, the TLDR on it is the amount of tokens changes based on the price that it's set. So again, if it's below the 95 cents, you will lose tokens. If it's above $1.05, you will gain tokens. However, you will always hold the same percentage of what you held to start with. So if there's 1,000 tokens, ever in circulation and you have 100, well, every rebase, regardless of up or down, you will always hold 10% of the protocol. Something to keep in mind. So these are some of the features of the altered token solution. You have Bitcoin, which is inelastic and non-dilutive. The dollar, which is elastic and dilutive. Got to be some sort of medium between those. Now, what is that? Oh, well, that's what the elastic altered token is looking to do. Same thing with Ampleforth. It's non-dilutive and it's elastic, so the supply constantly changes. Now, the problems with Bitcoin, I'm sure you can see it here, but you may not understand it. The problem with Bitcoin is there's just not enough to go around. If you guys see the price of the token itself, you guys can see it's literally going nuts and ham, and there's just not enough of it to go around, hence why the price is going way up. And it's also non-dilutive because, well, Bitcoin doesn't dilute. Like, you can't print more. And the amount of tokens in supply does not change. There's always going to be 21 million, and that's what it is. Now, the dollar, they can just say, bro, we're going to go ahead and mint $1 trillion because we just want to. So that makes it elastic. But there's a problem with elasticity. It's dilutive. So that hurts. So Bitcoin is good because it's non-dilutive, but it's inelastic. Sometimes you need to print money. That's why they create or have inflation, so they can stem people to spend money, especially when there's not enough money to go around. Now, again, like I mentioned to you, that is a problem because it's dilutive. And that's what the dollar is. It dilutes everyone. So basically, while you're working your buns off to get those dollars, well, a year from now, those dollars you just worked your buns off for are not worth as much. So that is what Altered is looking to solve. Non-dilutive and elastic. Is it going to survive? Time will tell. We'll see what happens. Of course, guys, this is not financial advice. I'm not a financial advisor, but typically how these stable coins work, they fake it till they make it, and you guys see how Ampleforth did. Let's go ahead and pull up a chart for you guys. So as you guys can see here, this is Ampleforth. Now you guys are like, wow, like it went to $4 once, and then it also went down as low as 15 cents. That's how the rebasing coin works. Now, if you're looking at it, did it create success? Like, is it successful? Well, this is the one way to tell. Go to the market cap. Let's see what Ampleforth did. Well, you can see it literally came from a market cap of $7 million to a peak of almost $1 billion. Well, actually about 700 million. But you guys can see here, overall, it looks like they're up and down, but it looks like it's steadily trending up as long as it doesn't keep going down from here. So it's one of those things, time will tell. We'll see what happens. And if you guys didn't know about the Ampleforth protocol, if you were an early user, an early adopter, you could have been airdropped the Forth governance token, which was very lucrative to some. So something to keep in mind as well. Anyways, this is Ampleforth. As you can see, the market cap pretty high right now. It's 257 million. And Altered is not even 1 million. So that is something to keep in mind as well. It's like, okay, wow, it's under 1 million in market cap. Could it rebase? Could it do well? Time will tell. We'll see what happens. So now I'm sure you're asking yourself, when does the rebase occur? Well, this happens every 24 hours. This is your countdown timer. And based on the amount of time the token spends over either $1.05 or below 95 cents will determine if it needs a rebase. And I'm sure there will be some more analytics created similar to how Ampleforth had created theirs. But right now, TLDR is when this is below 95% or 95 cents for a certain period of time, you are going to have a negative rebase, and above $1.05. And now I'm sure you can understand what the psychology is. The psychology is if it trades above $1.05, people are going to FOMO and say, I like free money, I want free money, so I buy. So what happens when people press green button? Green button go up, red button go down. So when people are pressing green button, causes the price to go up. More people get in because they're like, oh, I'm missing it, it's about to rebase, I need to get in as soon as possible, so they buy. Now, the opposite is true. When it's below 95 cents, people want to sell as quick as they can, and they don't want negative rebases. So you have that constant push-pull type of thing. Now, there is a way you can mitigate against this. There is a pool where you can stake UST as well as your alt tokens. Now, theoretically, if these both stay at $1 or try to stay pegged at that, that is about a 246% APR on stablecoins, which is a lot better than Anchor Protocol. Not a lot of people are talking about this, but hey, it's one of the pools you can go to. Not financial advice, not a financial advisor, but 246 is definitely better than 20%. And of course, that does change because if you're getting negative rebases, it may not be worth it. However, when you provide LP, you are actually taking 50% of the exposure. When I mean 50%, I mean is if you have 1,000 of the alt tokens and you sell half of them into UST, you are taking on 50% exposure to the rebases. So if it goes up, you're going to go up 50% as much. If it goes down, you're going to go down 50% as much because, well, you hold half the amount of tokens you initially held. Just so you guys can understand that concept. And if you guys want to get into this competition, you guys can actually win some of the low Terra tickets. You guys can do this between now and the 24th of December. Get trading. I'm just kidding, guys. Not financial advice. You guys do what you want to do. That's how you can get the tickets up. If you guys stayed tuned till the end of the video, I am giving away 100 of these alt tokens. If you guys want to get some of these tokens, make sure you guys leave a comment in the description below. Like, subscribe, and tell me what you guys thought of the video. And don't just be like, yo bro, what's up? Tell me what you thought of the video. That will entitle you into the competition, and I will announce the winners at the end of 48 hours from the video being dropped. And if you win, I'll just reply to your comment and be like, yo, what's up? If you guys want to jump in the Discord, there's a link in the description below. It is the Patreon link, and basically what we talk about there is different strategies I'm looking at in the markets. Several giga-chads in there that are way smarter than me, and well, we just talk about things on the market, man. It's going to be more intense and more in depth than DeFi. Thanks for tuning in, guys. Let's go ahead and leave you guys with a wisdom one-liner. Also mentioned in the Discord is there's some premium content there that I don't show on YouTube. So if you guys want to get in some of the content that doesn't show up on YouTube, you guys can get in there. Proverbs chapter 14, verses 32. When calamity comes, the wicked are brought down, but even in death, the righteous seek refuge in God.
I want to take some time to explain why the altered token or an elastic token is important in DeFi. It will actually change the way DeFi can possibly function. Why is that? Most stablecoins are pegged to the dollar. What's the problem with the dollar? Well, it's constantly being inflated. If you denominate debt into a dollar, well, I mean, it depends who is getting the debt, I guess you can say, because if I'm the one who is lending out the token and my debt is the dollar, well, I want them to pay it back as soon as possible because, well, a dollar now is worth, well, less what it's worth later. I mean, just imagine it. What could you buy 20 years ago with $1? Well, probably a lot more than you can buy now. Just look at the price of gas and then you'll be like, oh, what the snap? I guess so. Or look at the price of gold, or better yet, just look at the price of Bitcoin. And you can understand pretty quick with the value of the dollar that it's just been going down. And it really doesn't take too much to tell you that. Just drive by or walk around and see what prices of things are. And yes, there are extenuating circumstances. For example, technology, like devices back then cost way more than they do now. And that's because technology is deflationary. So I'm more so talking about traditional commodities. And the latter would be using something like a Bitcoin or Ethereum, which is a more stable asset, one that appreciates, or you can even denominate in gold. And the problem with denominating with something like that is that your debt is constantly going up. So you don't want to have some debt that is going down and debt that is going up. And the reason why is because debt going down is harmful to the lender, and debt that is going up is harmful for the person getting on the loan. And obviously, if you're just lending for a month, it's not really going to matter too much. If you look at it in terms of this, there's a really famous person named Robert Kiyosaki, and he recommends getting on a lot of debt. Why does he do that? Well, because if you have a lot of debt, you can use that money to get assets that make you more money than the debt that needs to be serviced. I mean, it's what we do in DeFi every single day as well. You get a loan, you pay the loan fee, and you use the money elsewhere to farm tokens and so on. You guys get the point. And Altered is just trying to take a different approach. It's similar to Ampleforth, and the approach they're trying to take is when I loan you something, or if I give you something, and I expect interest in return, I want that interest to be the same amount of what it is today, tomorrow, the next day, and after that. And same with you. You would want to get a loan and have to repay the same today, tomorrow, the day after. Obviously, you want to do less, but then the guy lending, he doesn't like it as much, so he'll charge you a higher interest rate. So actually, it's better for both of you guys when you guys are having, when I say both of you guys, I mean the borrower and lender. I know this might go over the head of some people, but TLDR on it is having an asset that is more stable in value will create more efficient lending terms and have them at better rates. Now, how can you play Altered? Well, there are a couple of options. First, you can LP with Altered. Yes, you won't partake in as many rebases. However, you will have a pretty nice APR. Second is you can just get some Altered tokens and hold them and speculate on the rebases. Now, this isn't one of those things you just want to be like, oh, I'm just going to hold this for like an oblivion and do nothing. You want to understand what you are doing. Because if you're holding this and getting positive rebases, there's going to be a point in time where it goes below 1 UST or actually below 0.95 and has negative. So you want to factor that in. And right now, if you look at this, 0.95, the risk to reward is, well, it's supposed to be pegged at $1. So it's actually trading under value. So what you could do is you can buy it in hopes that it rebases, or you can wait till it starts to get in the positive, where you have the factor of FOMO, where people are like, oh yeah, this is going to be awesome. Let me just show you what happens on a chart on CoinHall. CoinHall basically just says it all. This is how FOMO works. Oh, we rebase? Oh, we positive rebase now. We go nuts and ham. Same thing over here. Let's just steady trend up. Like, oh, we $3, $5. FOMO time. So it goes nuts and ham. Then it's back down and it's like, oh, snap. We're just going to sit steady. Steady. Look, it's ironic. As soon as there's a positive rebase, $1.05, nuts and ham, because people want to partake in it. And then they're like, oh, we didn't go back down. Now's a dip. Let me buy. Goes nuts and ham. And then it's like, oh, geez, I missed it. Oh, dip. Oh, I'm down 2 cents. Oh, sweet, 2 cents. I'm buying. And then it goes nuts and ham. The reason why you see so much volatility on this as well is because the market cap of the Altered token is really low. Now, I don't know what it's going to do short term, but if this does get traction and used in several different DeFi protocols, this market cap, in my opinion, is low if you compare it to Ampleforth, because Ampleforth has about a $240 million market cap. Now, if you factor in Ampleforth, if people were getting in at a $1 million market cap and it's at the price it is now, regardless, and it goes to a 230, that means you basically did a 230x. This is not financial advice. I'm not a financial advisor, but I know how to calculate risk and reward, and that's just how you can kind of calculate something like that. So if you guys enjoyed this video, make sure you guys do those things. Get thrown into the drawing. We'll see you guys in the next one. Thanks.
You guys can also catch me on tweeters. It's at Rent a Home Fast, like literally at Rent a Home Fast.